Dale, and this is part 4 of the very best way to trade stock. Now, this is the way I do it. As I am a professional trader. I trade my own accounts. I trade my hedge fund because I've got about 80% of the portfolio I use with stock, and about 20% is the option strategies. There are other courses you can get through optionsinfinity.com that teach the different option strategies. Our Ready, Set, Go for directional trades, our theta trades where we're looking to generate monthly income by selling deep out of the money near-term options. And then there are the weekly options. All those have 4-part courses that I'm sure you would, if you've enjoyed these, you would enjoy those also. In the 4th part here, what I'm going to do is kind of summarize. We've talked about trading financially strong stocks in the portfolio of 25 that I currently have for 2012. That about 80% of your portfolio should be in stock. Of course, you're not going to be fully invested, so you're going to have a portion of that in cash. And as the market is going down, you will have a larger portion of cash, so it's a natural way of trading. I use cash from operations to find my financially strong stocks. I think what's really cool about the 25 is they come from 10 different market sectors. So there are times when one stock is going down that another stock is going up. It's a beautifully diversified portfolio. Financially strong stocks do outperform the market. However, there are times when they go down too. And what I do for my timing is use the 2-year regression channel, the Williams %R, and the money flow index. I showed you how we picked the low and the high of Apple, how to set up your charts on Thinkorswim, and I went over the rules. Part 3, I went over a very powerful technique that's a protective put, and stay with a protective put until you see Fibonacci overextended, either 127, 161, or 261. And we went over the trade example of DVN Devon Energy. Part 4, what I want to do is go over 2 more trades. One is in McDonald's and the other is in Monsanto. We're going to review the rules again, and then we're going to talk a little bit about building your portfolio from scratch. And a lot of times you might have a lot of money that you want to start, and rather than waiting till you get the signal to buy, you can buy if it's in the lower portion of the regression channel. I just would stay away from stocks that are overbought and let them come down a little bit. We'll talk more about that in a second. Let's go over to Thinkorswim and take a look at both McDonald's and Monsanto and talk about some trades that were actually made. Let's look at our 2-year weekly chart over here. And on McDonald's, you can see if we go back to around March, in the middle of March, it was below the -1 on the regression channel. So we're preparing ourselves for a buy. It actually came down and back up a little bit on the Williams -80, and the money flow was coming in. This was a buy from McDonald's, and we went ahead and bought the stock at about $73.25. Now, as long as the price stays within the regression channel, we do nothing. We let it go. And yes, indeed, it goes up and goes down, it goes up and down, but that's okay. As long as it's within this channel, we let it go. Well, coming up around November of 2011, it was peeking its head right above the regression channel +1. And you can see that the Williams, it went down below the -20 and the money flow was going out. This is a buy, a protective put. So at this point we have both stock and a protective put. Now, what happened is it was a very small little pullback, and then it came back up. Well, when it dips its head down here on the Williams and comes back up across the minus 20, you want to go ahead and sell the protective put. We're going to take a loss here. We're going to take a small loss on the protective put, but now what we have is the stock, as the stock made another run all the way up to about 98. Okay, so and it can stay here for a long time, so you might get these false signals, and that's okay. The loss is going to be the buying and selling of the protective put, and that's going to be a very small loss compared to the larger portfolio. Right around the 23rd of January, it was McDonald's was above the +1, heading very close to the +2 on the regression channel. Remember, 95% of all prices will be contained by this channel. That doesn't mean every once in a while you won't get an outlier, and it'll fly all the way up here. That's okay. Just wait for it to turn around, because remember this powerful magnet here. We had the Williams go down below -20, and then the money flow was flowing out. Right around there, we went ahead and bought a protective put. And that protective put was purchased right around here. Now you'll notice that what was happening here is McDonald's came down, it pulled back here a little bit, and then finally came down and made a measured move. Remember, a measured move shows a change of direction, and it has to have then, if you're heading up, you have a pullback, then it has a lower high, and then a lower low is the measured move. Once it got to the measured move, we went ahead and sold our stock. I actually sold the stock right around 97.70. So we're left with the protective put. And now what I do is I kick in the Fibonacci's. And what I did is and I'm going to leave this chart up here and let you see. You just go up to the drawing tool. You take Fibonacci extension, and you trace from the very top to the move down, and then to the pullback where it was the lower high, and left click there, and it automatically draws the Fibonacci's. So right around it was right around when McDonald's was right around 89, I went ahead and sold the put, but I had the put from right up here, actually, all the way to down here, which was a huge drop, which meant that we were making money with the put, and we were totally out of the stock. Okay, the stock came all the way down, and this was a long waiting period, but we actually had the put all the way till over here when we finally got out, and we waited all the way until right around October, November of this year, as McDonald's dipped its head below that -1, came back up on the Williams to the -80, and the money flow was coming back in. We are currently back in DuPont, or back in McDonald's, excuse me, and we got in right around 85 somewhere. So we bought it originally for 73, sold it at 98, had a protective put, made money on the protective put, and now we're back in as of November with McDonald's stock. And this is the way you do it. It's a very simple process. You buy when it's below the -1, but we're waiting until it peeks its head above the Williams -80 and the money flows back into it. That's when you're going to buy, and you're just going to hold on. As long as it stays within the regression channel, hold on till it goes outside the regression channel. Prepare yourself for selling the stock when it reverts back down to the Williams -20 and the money is flowing out. We go ahead and buy a protective put, When you see a measured move, you go ahead and sell the stock. Hold on to the protective put till you get a nice move. Get out of the protective put and patiently wait till you get another buy signal. Let's take a look at Monsanto. And remember, I've got this all linked, so I can just go over to my watch list and click on Monsanto, and there it is. We want to go back to, let's see, it was right around right around this area right here is when I want to show you that. No, it was back here. I'm sorry. It was back here where it went above the +1 on the regression channel. We went ahead and sold a protective put and sold the stock there. And we went down here, and this is where we bought the stock, and that was. We were waiting until it came above the Williams -80. We got that. The money was flowing back in. We bought the stock. Now, you'll notice it came up and had a little bit of a pullback, but stayed within the channel. Came up, had a little bit of a pullback, a little bit out of the channel, and then continued on up. This whole period, you can just hold on to the stock. Or you might choose to buy more here or buy more here. It's totally up to you. It's totally to your discretion whether you want to do that. Finally, Monsanto is way up here. However, I'm still holding on to the stock, and I have not bought a protective put because we're still above on the Williams. I'm waiting for it to come down below the Williams -20 before I even think about a protective put. I'm just sitting there counting the money as Monsanto is performing very well. Okay, let's let me go ahead then and review the rules one more time. I think you've heard me say them enough, but you know, if you want to go ahead and copy these down or print them out, I think it behooves you to always have the rules in front of you. On the weekly chart, we're looking to buy the stock when the stock price goes below the -1 standard deviation on the regression channel, or it's oversold. You can stay there for a while. We're just preparing ourselves to buy the stock. When it goes above the Williams -80 and the money flow is trending up, we want to go ahead and buy the stock. All right. As far as the sell, when the stock price goes above the +1 standard deviation on the regression channel, which is overbought, we want to prepare to sell the stock, but only when it drops below the Williams -20 and the money flow is tending to go out. We want to buy a protective put. Now remember, you might get a false signal and you might have to buy that protective put, sell the protective put, and then hold on to the stock and wait for it to happen again. But that's okay. The only thing you're going to be losing is the premium on your protective put. So those are the rules. And you know, in conclusion, I just want to say that I trade this way in my hedge fund, and I trade this way in my personal accounts. It does not take a lot of time. I have the rules posted right on the wall in my study. I review them every day. You're not very active, but you have to just, like with Monsanto right now, I'm keeping an eye on Monsanto because it's been a very nice run. And, you know, stocks just don't go through the roof like that. There will be a pullback, and I want to take my profits. So, you know, you keep a watch list. Monsanto is on the watch list right now. John Deere's on the watch list. Danaher's on the watch list. Okay. I've been trading this with my own personal accounts, the hedge fund, for the last 4 or 5 years. Now, before that, I had back tested this on 25 financially strong stocks. And remember, every year that portfolio changes a little bit, so I just kind of used a good representation of that. Back tested this for 9 years, And some conclusions are, I think the biggest thing is that the portfolio never had a losing year. The portfolio never had a losing year. And remember my first slide, I was talking about this is the very best way to trade stock for capital preservation. You've got a nice nest egg. You don't want to lose that nest egg. And here's a rock solid strategy I'm showing you that's never had a losing year. Okay, and the average yearly return, it's nothing to, it's not fantastic, it's realistic, 25% a year. Now, if you can find that anywhere else, go for it. But remember the simplicity of what I've got here. Remember to do the rules. Do it over and over and over again, and you will be a success. You'll have fun, and it's great enjoyment watching your money grow because you're in control. Just to conclude, let me talk about starting to build a portfolio from scratch. And let's say you've got a certain amount of money, and you want to look at the different stocks in the financially strong basket and decide which ones you want to get. Well, we're just going to take a quick look at Cummins Engine, CMI, KO, Coca-Cola, VZ, Verizon, DE, John Deere, and SYK, Stryker. So let's bring over Thinkorswim again, and we'll take a peek at this. First one we want to take a look at is CMI. Okay, so here we are on CMI. Let me get rid of this crazy thing. You can see the CMI, the regression channel, has been kind of flat for the last 2 years. However, in the last 3 or 4 months, CMI has blasted to a very lofty level. At this point in time, you do not want to buy Cummins Engine. What you want to do is, at this point in time, you don't want to buy a protective put or anything like that. You're just going to patiently wait, and it might be 6, 7, 9 months before you get a chance to get back into Cummins, but that's okay. That's part of this game, and part of being a success is you're going to trade according to your rules. You're not going to let the market dictate what you're doing. The market is nasty. It's whipsaws. I mean, you look at these charts and it's up, down, up, down, up, down, up, down. Don't worry about that. Right now, you would not get into Cummins Engine. Let's take a look at KO, Coca-Cola. Coca-Cola is another story. Coca-Cola had a signal right back here as it was below on the -1 on the regression channel, and it peeked its head above the -80, and the money flow is coming back into Coca-Cola. If you miss this buy signal, that's okay. That's okay. You want to just go ahead and get in. Get in now. That's fine. We're in the lower portion of this regression channel. We missed this signal, but that's okay. You're trying to build a portfolio. I would say you want to add Coca-Cola and trade it just like as if you were in on the first original signal, and watch it. When it goes up above here, be prepared to buy a protected put and then sell the stock, okay, and then keep walking it back and forth through the channels. Coca-Cola we would buy. Let's take a look at Verizon, VZ. Interesting. VZ gave a buy signal back here on the November of last year, 2012, where it came down below the -1 on the regression channel. It's up over the -80 in the Williams, and the money flow was moving in. Verizon then moved up, and it's pulled back a little bit. This is definite buy. This is giving you another chance to buy and get into Verizon. So Verizon, you want to buy. Now remember, you're occasionally going to get here's a buy, here's a buy, here's a buy, here's a buy, here's a buy. It's totally up to you whether or not you want to keep adding to your position as you get these. That's totally up to you. I'm just showing you ways to start today, and today being 123.13 as to how you would build that portfolio. Let's take a look at John Deere and see if we would add John Deere. No, I would not add John Deere. I would hold on to John Deere. It has had a heck of a move here, and it's very close to the +2 on the regression channel. Here's an outlier, by the way, that kicked above there. But notice it didn't take very long after that magnet pulled it right on back down. Okay. Right now on John Deere, I would not buy a protective put. I would not do anything. I would wait and patiently for it to come all the way down and give us another buy signal. So far we would get in Coca-Cola and Verizon, stay out of Cummins Engine and John Deere. How about Stryker? How about Stryker? No way. Stryker, it looks like a rocket ship here, and that's not the way stocks perform. Stryker, I currently have Stryker in my portfolio, and but I'm waiting for it to come down and come across the Williams -20. The money flow is going up. I mean, everything looks to say, hold on to Stryker. Just hold on, and when it reverts around, comes back down, I'm going to buy a protected put, sell the stock, and wait for it to come down. Okay, so looking at these 5, we would just hold and not do anything with CMI, but start your portfolio with Coca-Cola and Verizon, because John Deere, Stryker, and Cummins are, they've had nice moves, and we just want to wait for them patiently to come back. But in the meantime, you can get your portfolio started with Coca-Cola and Verizon. Now, you can do that with any number of stocks as you go down there and take a look at them. And one more thing I'd like to say, I've talked a lot about financially strong stocks. I remember reading Peter Drucker's book way back when, and he talks about, buy the stocks that you're familiar with. And that's a fine strategy too. You just want a good, solid portfolio, diverse in different market sectors, that are strong and have a lot of activity around them. You don't want too many, because too many you're going to get confused. In conclusion, I wish everybody the best. I really hope this empowers you to manage your own financial future. Don't get crazy with it, and just follow the rules. And if you ever have any questions, please feel free. D Brethauer, DBRETHAUER at Comcast.net. I am a professional trader, but I love to teach, because I think I've got something to offer that a lot of people don't. And if you listen to this course, I would behoove you to listen to it many times and practice it. You might even try practicing it on paper trade it for a while. But if you get stuck on anything, I'm here to help you. I am here to help you and empower you to take charge of your own financial future. Bye-bye now.